Hello, this is Dean Malone with Comps of X. I hope you're doing well today and you get some good trades. This morning, as I was trading in the Dots Guppy live trade room, we had a number of potential setups based upon the dots and direction of the guppies. And here's a case in point. We had the market kind of bouncing here back and forth between the sell stop loss and the buy stop loss on the euro dollar. And then the euro dollar started breaking down and came down to this point right here and looked like a potential good entry. However, there were a few things I noticed about the euro dollar and elected not to get in on the euro dollar at this point. And what I want to share with you is when there's uncertainty in the marketplace and a bit of indecision in the marketplace, be careful that the market just starts to look like it's going one direction and then pulling right back. And that's what we saw a lot of the pairs do today, was to do these quick pullbacks. Now, this is not necessarily a reversal in the marketplace. I think there's, again, a lot of indecision, and so the market will push and pull back and forth trying to get something started. I think what we had here was a situation where the market pulled down, triggered some potential sell stops below 35.50, then yanked them back up and stopped them out. At the same point, maybe a few folks who were on the buy side looking for continuation on up towards 137.11, which is the 2013 high. Well, that didn't happen either, and it fell back down. Something I noticed when the euro dollar was setting up right down here was I stepped down. I like to get a bird's eye view of the marketplace. So a few things I noticed when I stepped out, and you can look at a 30-minute chart or zoom out like this, I noticed that there was this previous low down here, as a matter of fact 35.38. I also noticed that there was some talk in the marketplace of a 35.50 option, but not much anything else below that. Nor did I see a number of folks looking to sell. The theme of the market today wasn't to sell the euro. As the dollar continues to be weak by uncertainty from Congress as to the government shutdown and when will the government reopen, and now forthcoming is the potential U.S. default or the debt ceiling issue, well, I didn't see a lot of favoritism in the marketplace for the dollar. And what I noticed was that this pierced down low, and I was looking for it to come back up, test the sell entry, and if it wasn't going to go much higher, then I was going to look for it to go down. I'm the type of trader who really likes to consider what's taken place beforehand. I think it's very important for those of y'all who are using the Dots Guppy method. Take a look at the previous low or the previous high. Gauge the market by that. And also consider looking out at the bigger picture. For me, we can go out and take a look at the 30-minute, but I often like to look at the 1 hour because sometimes I see things in the 1 hour chart. And let me point out what I saw. I saw from this low to this low a trend line, and then from this low to the next low a higher trend line. What this means to me is that the market has a tendency or bias to the upside. And so today, if we zoom in a little bit here, we can see that when the market came down right here, when the market came down, a couple things it couldn't do. It couldn't break this trend line, nor could it take out the previous low. Now, just simply coming through the trend line and back up doesn't mean that it is a break, doesn't mean that it's actually going through. A true break of a trend line is the fact that you get a close on the other side of the trend line and continuation in the direction of the break. That didn't occur. Just simply dipping a little bit below the trend line and coming back up is not the break of a trend line. So in effect, what we have here is the hourly chart is showing us the fact that the market has a bias to the upside. So today, as I was considering to trade the euro dollar, when it came down like this, I noticed that over here we had a lower low, and think about this too. Consider the average low right here. The market came down and pierced just for a moment the average low. And to me, the average low is you take 3 lows, put them together, and that's your average. And you can see here it couldn't close below that. So the next time you see the market coming towards a sell entry or a buy entry level, using the dots indicator, consider the previous high, the previous low, and run some trend lines on the bigger picture and look for a bias. So again, if you go into that hourly chart and you draw some trend lines, what you'll be looking for is a base trend line and then another trend line that's either higher or lower than the base trend line, and that gives you your bias for the day. Well, folks, this is Dean Malone with Compass FX. Hope some of the information I've shared with you about trading and being aware of the big picture, being aware of previous lows, previous highs, and being aware of the bias given by the trend line will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.